It's going to be Oliver Slope, Blue Line Futures in Chicago. Oliver, thanks for being on. All right, what's your takeaway? Kind of sum up the day for us.
Well, the day, not all that pretty. Obviously, this week hasn't really been all that pretty, but that's kind of the season that we're in, where we get heightened volatility. And if you zoom out and look at, where we started the month, we're basically back to unchanged for that July corn contract. So we've been up, we've been down. Now we're turning the calendar over into June, which makes me a little bit nervous. Seasonally, we start to see some weakness creep into the market by mid-June, and with the balance sheet shaped up the way it is, I wouldn't be surprised that be a little bit earlier this year. So not really pleased with the price action as of late, but as we know from history, during this time of year, things can change pretty quickly. So I've been telling guys, hope for the best, that's fine, but prepare for the worst. Options are a great way to protect the downside in the grain markets while keeping that upside open if you'd like to do so.
How concerned are you about no new crop bean sales to China?
That has been a dark cloud over the soybean market really since the start of the year, and I'm surprised kind of the beans have rallied as much as they did on the last push higher. And I also being a little bit nervous about looking towards the end of the year. We have election. We're going to have jawboning back and forth about trade wars and tariffs. So I wouldn't be surprised to see that dark cloud continue to loom over soybeans here in the near future. And as mentioned with corn, I think it's an opportunity to look at some downside protection here as we turn the calendar over into June.
Yeah, because the reason I say that is, like, we had that one card, if we're playing cards, one of the cards we had was we've just used short cover rally by funds, right? That's one of the things, one of the bullish cards.
Right.
What other bullish?
Now they got powder to add short.
Right. But what are the bullish cards that we have in our hand here now? Because it's not really demand right now. It could be down the road. And it's almost like we have to hang our hat on weather, or maybe something that comes out of the June end of month report.
Yeah, it could be the end of the month report. Historically, that's not a super friendly report either. So there's really not a whole lot to really grasp onto here at this point. But as I'd mentioned, things can change quickly. Maybe it's just a broader commodity picture. We've seen commodities strengthen as of late. Grains have struggled to follow suit because they have their own fundamental headwinds. But potentially, if the outside markets commodity-wise continue to rally, maybe that makes higher inputs, and grains really have no choice but to rally. But that's about all I can think of at the moment.
Yeah, I agree with you. We're on the same page. That's why I brought it up. All right, thanks for that. Stay right there, though. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Oliver Slope, Blue Line Futures in Chicago. We'll be right back. There, let's bring him back in. Oliver Slope. He's with Blue Line Futures in Chicago. Oliver, thanks for being on.
Yeah, well, volatility. You mentioned feeder cattle being in about a $4 range today, and that's been really the theme since the start of the week. We saw a $4 range on Tuesday, yesterday, and again today. So the roller coaster continues to press forward. Ultimately, I wouldn't be surprised to see this set up for a little bit of a buy the dip opportunity. This is seasonally a strong time of year for the cattle markets. So with that said, there is a little bit of concern in the back of my mind that with this softer economic data that we've seen kind of trend as of late, that could be a potential headwind. So I'm optimistic, but I think the upside is probably a little bit limited here, especially if the economic data continues to show trend softer as it has for the last several weeks now.
Especially for the consumer. I mean, that's got to put a little bit of a warning shot to most folks out there, because more and more of these companies that have been reporting have been saying that the chief financial officers have been saying that they're seeing that the consumer might be getting to a point where it's tapped, and we're now reintroducing $5 meal deals at, say, Burger King and McDonald's. That's a pretty big admission.
I agree that cracks are starting to show, that's for sure. And as I'd mentioned, seasonally, this is a strong time of year. Grilling season is often friendly to the beef complex, and I think a lot of people can maybe shrug that off the first couple waves of summer. But I think if the economy does continue to slow, it's going to be a tough battle uphill for sure. And
then you throw in an election at the end of it, and we all got something to talk about. That's for sure. All right, appreciate you coming on. Great way to sum everything up. Oliver Slope, he's with Blue Line Futures in Chicago.